So I welcome you all back to the channel Algo Driven Lab, and in today's video we're gonna to backtest another indicator and strategy related to trading in the investment world, and which one also one of the famous, let's say, oscillator, or let's say in other words it's momentum indicator, and we're gonna to backtest it for, I guess it also would be good to backtest it for one asset, and this time I'd like to mention the name. The name is Stochastic Strategy, and I'll explain it how it works a bit later. And the asset which we're going to backtest today, just for our reference and information, is Euro USD Forex pair. And before I start, again, I'd like to ask you to subscribe to this channel because I think the content is very useful and interesting to know. And also this kind of analysis carries a lot of details and might help those who are or using the trading indicators or investment tools to sharpen their knowledge. And this should serve as a backbone of all the analysis, right? Okay, so as usual, we are gonna consider just key points of the code. I'll not explain one by one because there might be not really interesting part which we should stop it, but I'll stop only on the key ones and explain the logic, and then I'll show you the result where we can wrap up and say whether the strategy is good or not good, let's say, for Euro USD Forex pair, especially for, let's say, for Forex world, if you can say that. Okay, so this time I'll just jump because like code is quite similar to the previous videos. You can check it on my YouTube channel, by the way, and please also rate them if you like. Please put thumbs up on them. If you don't like, put thumbs down. Also, is fine. So I'll stop on the key one. So I guess just to remind to the consistency, I'm considering the maximum drawdown as a first metric. The second metric is a Sharpe ratio, which is, I think, the most important one. Compounded annual growth rate just shows us a return. If in simple words, win rate shows us whether the strategy is winning or losing our funds. And finally, the profit factor. Profit factor is just shows us the ratio of total gross profits to gross losses, right? Okay, so this is it. And as I mentioned, today we're going to consider Euro USD dollars pair. This ticker name is Euro USD equal to X. This is official one we are getting from Yahoo Finance platform. Sorry, our date period, our time frame, let's say, is 19th of June 2016 till 19th of June 2026. So I'm covering almost like all accessible data for 10 years. That's all. Okay, let's go and jump just to our strategy, which I think is the most interesting part. And here, as you can see, there is a markdown. Already noted that this strategy uses stochastic oscillator to identify potential overbought, meaning that where we can sell, and oversold, meaning that where we can buy signals or conditions, generating buy and sell signals, as I mentioned. A common approach is to buy when our, like this line. So basically stochastic has two lines, the K line and the D line, right? So one of them again is fast and one of them is slow. So it's quite very similar to MACD, but it not really because MACD is kind of both trend following and momentum. It is like both, it combines both of them, of the histogram and of the signal lines, but here we have only two lines and they go either below 20, so it's close to relative strength index, which I also just backtested in the previous video. You can check it on pop-up this link. And the sell when it rises above 80 overbought. So here is similar to our relative strength index, where we sell it if the price goes up 70 threshold of RCI, or to use crossovers of this K and the D lines, right? So the standard settings and default settings are window is 14, meaning that 14 days. Smooth window is 3, meaning that we are smoothing to some up extremes, downs and ups. Okay, so just to mention that we are using like high prices, low prices, and closing prices, because we need to smooth these prices, because sometimes prices are goes up and down in very significantly, and we need not only closing prices but both high and low prices to just kind of like demean, let's say, our like data. Okay, so this is more kind of technicalities. Again, as I mentioned, the strategy is when to buy and sell. I already explained above. So just when the signal goes below 20, we buy, and if it goes up to 80, we sell. That's very simple, right? So this is more kind of technicalities, Python code. I'll not stop on one by one, but if you like, I can explain and go deeper later on. Okay, so now we are gonna to go to finally the metrics. I already run all the cells. You can see this ticks right over here, and this means that all the cells are already run to save time, both of mine and yours, just to show the key results, and we can go to visual part of the strategy and finally see whether this really works or not, right? Okay, so let's just see what happened. Our Sharpe ratio is 0.2639, meaning that risk to reward kind of point of view, the strategy are not really worthwhile, because Sharpe ratio should be around 1 or above 1 to consider the strategy really like robust and consistent. But as you can see, Sharpe ratio is just like 0.26 if we round to the nearest hundreds. This is not really good sign of risk reward. Maximum drawdown is more or less fine. So we are losing at one period of time. Let's say if we are using 1 million of equity capital or initial capital, we can lose up to, like, let's say if you round it to the nearest, and up to 20% of our initial capital at one point of time. But then now if we go scroll down later on, we'll see it in detail. Compounded annual growth rate, it's not so really high. We are earning just 1.65%, which is far below than like passive holding of S&P 500 index, which is like on average should give us around 10%, and the win rate actually is just 50%. And this means that our strategy here, so not really winning and not really losing, it is on just threshold. Okay, and now if we go to profit factor, and now what we have is just, it is just above of 1 threshold, meaning that our gross profit of trades just higher than our gross losses, meaning that it's closer to win rate. Yeah, and finally, let's I suggest going to the equity curve. Okay, sorry, and then we can finalize and say whether this strategy works, not worth considering for some period of time maybe, or usually from here we can like say that this strategy actually doesn't really perform well on the forex world, especially for Euro USD forex pair. But maybe we can backtest this strategy also for other forex pairs. If so, please let me know in the comment. I'll consider it this strategy backtesting for the next video series, and we can backtest your specified forex pair, like British pound relative to United States dollar, or maybe just Canadian dollar to United States dollar. So it's up to you. Let's do that. Or if you like me to backtest another assets from like other financial assets from other like trading world, for example stocks or maybe just commodities, also please let me know in the comment. Okay, and what we have, let's go jump into the equity curve. Yeah, and we can wrap up just to say whether this works or not. Okay, see, so here we have equity curve for stochastic strategy. Again, what we used is Euro USD forex pair. Here on the y-axis we have the growth in percent, and here on x-axis we have years. Okay, so this is 2016 over 2026. And what we have here, for example, if we use this strategy, actually, we can, as you can see, even during pandemic time, this kind of losses are so minimal. But I guess this 20% of loss happened from mid of 2024 till mid of 2025. There is a huge drop of our trade using this strategy, and as you can see, more or less from 2000 mid of 2016 till, let's say, like 2024 or even 2024 mid of it, we have upward trend, and it is increasing over time, meaning that we are gaining during this time. So for almost, let's say, 8 years more or less, we have gains, but let's say for the last 2 years we are having like more losses than gains. So basically, probably to stabilize the strategy, we need to add more, like other, let's say, characteristics such as like stop loss. Or maybe we can need to take some take profit conditions to maybe to gain some profits and stop losing at some period of time. Yeah, and yeah, basically this is it. Yeah, and I guess you like this analysis and video itself of the backtesting for one forex pair, but like for the simplicity, I use the standard and the most well-known forex pair. If you propose or suggest using other trading like securities or maybe assets, I would love to backtest them for you. And of course, we can just go through together to know whether particular strategies works or not really work, considering this 10-year period. Or maybe if you want, I can backtest it for even longer time period. Please let me know in the comment whether you think so. Maybe I should enlarge this time period for 15 years or even for 20 or 30 years. Maybe this should work or smooth our results. Of course, it will affect results on some metrics, but I guess for some is significantly, for some is not. Or maybe you would like to see other metrics as well, right? But as of now, I think the metrics are our main one, and we just need to focus on strategies, because 10 years, I guess, is more than enough to see what is going on realistically on the financial markets using technical approaches. Meanwhile, I'm continuing to do this, but I'm also thinking to consider it for backtesting using fundamental indicators. If you are interested, also drop the comment which kind of ratios you are thinking are most important one. Yeah, this is more kind of probably for stocks only market and for more or less investing side, because this will appear every quarter at least, or every like half year or yearly, but not really affect other financial assets. Sorry. So I guess by this we will conclude. Yeah, and now I'd say that this is it for this week. If you like this video, please put thumbs up as usual. If you don't like, put thumbs down. Put any comments whether you like, and again, you can also like click on notification bell to stay tuned on next backtesting videos. And you can also refer to this video or spread it to other traders and investors you may find useful, and your friends or traders may find useful as well. So the idea is to help traders and investors to do their best using this kind of analysis. And yeah, again, for educational only purposes, you can play around with it as you wish. So my just idea and key central point is to provide real facts, not really like only like signals or something else. So only true facts, only hard facts, nothing else. Wish you all profitable trades and happy investing. See you in the next backtesting video. Meanwhile, see you soon. Bye.